Hi friends. One of the questions we've been talking through internally and externally with clients and families across the country is the difference between the value of stocks and the underlying economy. And those are actually different. And so what I mean is this: if you go back and look at retail sales, which makes up about 30% of the gross domestic product, or the income that the federal government receives annually, the retail sales numbers are up 17.5% since February of 2020. So fast forward through all the trauma that COVID has started and participated in, and we're still up nearly 20% in retail sales. And when you look at the companies that make up the public markets, they benefit from those increased spending habits and revenue. But on the other side of that, we're preparing for potentially a 10% contraction in the economy, GDP. So you've got value of stocks, profits going up, but we are very hesitant on the underlying economy. How can those be coexisting together?
Well, when you look at the GDP, it's all sectors, it's all the U.S. economy. And one of the things you have today is it's not that people don't want to buy, they don't want to spend. Some of the things they want, they actually can't get. Supply chain is tight. And so we're going to feel that in the third quarter. And another thing that we've done is, many of you know, we pulled back some cash, going to talk with our economists, talking with our research team, and now looking at valuations. We believe COVID is priced in. We believe all the silliness of
tax legislation.
Yes, of what's coming out of DC or what's not. And so valuations are actually undervalued here. And so we're deploying more cash, and if we significantly brought our cash down, still holding a little in case we have volatility, because we know the stock market doesn't go straight to its destination, because we see the earnings and the profits of the four main sectors we're in doing very well throughout the rest of the year and into next year.
Yeah, so while we may take a position of caution with the economy, we also are taking a position of opportunity with stocks, particularly U.S.-based stocks. I mean,
Yes.
I think you were talking the other day, we're at our lowest cash position in about a year today in almost every client account.
Yeah, and that's a big change from just 30 days ago.
That's right.
And so as we look at the market, and again, we're talking, the whole GDP could be very difficult third quarter numbers, but the sectors we're in are the ones that are making money, that money's flowing into, and profits are high.
Yep. And one of the things that we've never shied away from is sort of putting our stake down on where we believe value is, and
Yes.
we do that every year with making a call on the Dow Jones as well as the S&P, and we have a video coming
That's right.
shortly after this that I think you're going to be shocked at where we believe the fair market value of the Dow Jones is.
Pleasantly shocked.
Pleasantly shocked. That's a good point. Wait for that video. We'll see you next time.